Welcome back to the show with Latory Edge. Today we're going to see why holding dollars is quietly destroying your wealth and how Michael Saylor's Bitcoin Flywheel flips the script. This is the Latory Edge where finance meets philosophy. So let's get into this, guys. What you're looking at here is pretty much the historical price of the US dollar versus the price of Bitcoin, which you could kind of probably make it out here just because I may be blocking it. But this last segment of the chart is from like 2010 till now. And as you can see, from the start of the dollar, it even goes back a bit further than this, from 1913 when the Fed was established and allowed to pretty much manage your money, the American dollar. You can see that the prices started at the value of $100. $1 equaled $1. But ever since then, due to mismanagement, which could be overprinting of your dollar, buying back our own American debt with American dollars that we have printed, the price of the dollar has been steadily devaluing over time. So much so where now with the rise of cryptocurrency and Bitcoin, we can see a sharp increase, a sharp, stark difference here. So let's go into this difference and why it's important. So the agenda today and what we're going to talk about is essentially the fiat problem, which is fiat meaning dollar or just any sort of currency. And then we're going to talk about Michael Saylor and his breakthrough against how we might hedge against the fiat problem, which is inflation. As you can see in our little diagram here, in the past, call it 1950, even 2000 if you want, because I recall a day in early 2000, 2008, let's say, when I was a kid and going to the store with my parents, we would pay around $100, maybe even less than that, and we can leave with a whole cartload worth of food. You can have a couple beef patties in there, ground beef that is. You can have some ribs. You know, your choice of three meat, bunch of vegetables, healthy stuff, and it wouldn't cost you more than $100. So we're talking about an average of 2 digits to low 3 digits whenever you would visit the grocery store. But now, today, let's fast forward from pretty much 2015 and onwards. Now you're averaging about 3 digit, mid 3 digit, meaning like 350 or so dollars each time you visit the grocery store just to feed yourself, right? You're shelling out a lot more than what your salary is being raised to in respect to the inflation, in respect to the overinflated price of these goods and services. And it's a terrible thing because you would think that if you're saving your money, putting in a bank, listening to all those financial gurus that you shouldn't have to go through this, but yet we are going through it. And so now we must go on to what is the solution and how may we hedge against this fiat problem. And so Michael Saylor and his MicroStrategies have developed the flywheel. Call it crypto flywheel, call it Bitcoin flywheel in this case. But we're going to get into how that works and exactly what it is. And along the steps, we're going to discuss inflation hedging case studies and the broader corporate impact and next best steps. All right, so now we got the fiat problem. And what that is just that the Fed, they print $120 billion every month. And this in turn dilutes every dollar that was currently already in circulation, whether it was being used or it was sitting sweet and pretty in your saving institutions. So now, from then on, we have Congress who runs up the debt, and this becomes a spiral now in the sense that Congress runs the debt up, sometimes even past the debt ceiling to the point where they have to raise it. So there is no point of a debt ceiling because they can just raise it whenever they'd like to. So they're always breaking that debt ceiling these days. Then the next step, the Treasury issues bonds, banks get bailed out, and this all leads to Saylor being you, the average, typical, everyday American who may not even have assets because everybody talks about how, oh, inflation is so great because the price of your home is going up. A lot of those people are boomers. They don't have to worry about buying a home because they're going to be long gone from this world sometime soon, right? But the next person outside of those boomers, you have the rich who own assets, who own businesses, real estate, all those during a state of inflation, those prices and values, they go up. But the price and value of your dollar, it goes down, right? So this result of the Fed constantly printing money without adding value to the system, because remember, more money, it's great, but only if the outputting production is increasing at a rate to match that. Because when you go and print $2 trillion without any lawyer, picking up the case, any steel bars being transported, houses being built, or just production and value being produced, when you go and print that $2 trillion, you're printing it against nothing besides the back of everyday hardworking Americans who have no other choice but to utilize that fiat currency that you're devaluing at an increasingly exponential rate over time, right? So the result of this is we're facing a world where our dollar is a negative 4% real yield on cash annually. Now think about that. A negative 4% real yield on cash annually. So if you're saving all your USD in a savings bank, earning 3% interest, you're actually earning a negative 1% real yield just by letting your cash sit there and allowing the Fed to print more money without producing anything. This is what is called the invisible inflation tax, which no one voted for nor have given their consent to. We didn't vote nor consent to this inflation tax, or rather, tax against our money. We're already paying enough taxes as it is. Why do we need another tax that's invisible and that's going against our money that we have to use to live and sustain ourselves, right? Moving forward, we got this guy now inside of a corporation who is making great breakthroughs, right? So picture this. You got a business intelligence software CEO who's telling Wall Street, forget cash, we're buying Bitcoin. You guys can imagine the types of looks and laughs he's gotten from these guys, right? No one believed him yet, right? There's a yet there. No one believed him yet because this happened in 2020 and now it's been waves. So who is this guy? Well, this guy is Michael Saylor, and he is a co-founder and a longtime CEO of MicroStrategy. MSTR is the ticker symbol for that company. And what MSTR is? Well, it's a business intelligence firm turned Bitcoin pioneer. So now, in August 2022, Saylor resigned as MicroStrategy CEO, moving to the role of executive chairman as to focus on the company's Bitcoin acquisition strategy. So this is, they have to move him to a place where he's going to bring real value to the firm and focus on increasing the value of their company and essentially just making sure that they're protected against inflation hedge. against the risk of owning fiat currency, right? So in July 2020, before he resigned, this guy was the CEO. So Saylor, he quietly pitched he pitches to the board on using corporate treasury to buy Bitcoin as an inflation hedge. So here came the skeptics, right? So the company, they let him do it, which is great, right? They made a good decision there. They can pat themselves on the back. And so the first strike, meaning the first time they finally put their plan into action, was August 11, 2020. This is where MicroStrategy dropped 250 million on 21,454 Bitcoin. And so this was all at Saylor's insistence. He insisted and he got what he wanted, which was good for the firm and great for the public. Because due to Saylor's insistence here, Bitcoin price surged. Or rather, I'd have to look back, but they weren't necessarily correlated with one another. It just so happened that Bitcoin price surged after they made that 250 million investment, right? And so that led to their stock, which held all that Bitcoin and was in the news because they're the first big institution to be doing such a risky quote quote move that everybody else saw as risky, but they just weren't thinking on the level plane that Saylor and MicroStrategies were thinking. So their stock MSTR exploded, and this turned doubters into believers overnight, right? Leading to another cascade effect where institutional big names grew FOMO, fear of missing out. And so today we have names like Tesla, Block, and even hedge funds scrambling to catch the Bitcoin freight train before it leaves the station. And so this guy, Saylor, he didn't just buy Bitcoin, he wrote the blueprint for corporate treasuries worldwide on how to protect themselves against this overly inflated dollar who is not being managed appropriately or in our best interests. Our best interest as longtime holders of said dollar, right? Things started since 1913. It's just been going downhill since, and there's just been no relief at all for over 100 years. That's almost hard to stomach, guys. And so moving on, I want to talk about the actual Bitcoin flywheel steps, right? Or you can call it crypto flywheel, whatever you want to see it. Hey, that's on you. So what it is it's a simple 4-step process. There's not much complexity to this besides the application of the steps, especially the first one, right? And the first step of the flywheel involves raising USD, right? You want to raise the value of your cash reserves or whatever reserve you have that allows you to purchase Bitcoin. And to do that, strategy and Saylor, they used a mix of financial tools from convertible senior notes, secured loans, and equity sales, etc., which allowed them to raise billions of dollars without selling off their existing assets. Right? That's great. You don't have to sell off your existing assets and you're able to buy into something that has increased your value. They're thinking next level here. And so, you know, the goal was to just gather capital without liquidating everything. They've checked off that box. It allowed them to move on to step two. And step two is buy Bitcoin, right? So institutional investors, they can do this by executing large over-the-counter block trades to avoid slippage. And retail investors, if you want to get in on this too, I'm sure you already know, you can use exchanges, different apps like Coinbase. I wouldn't suggest Robinhood. I mean, their ecosystem is great and their user interface is awesome. I can't lie or deny them that, but don't forget, they're in the back pockets of these world quote quote leaders and big money makers, such as freaking those capital groups, or better yet, remember the GameStop saga? You don't want any of that happening to your funds, right? So moving on, we checked off step two. We bought Bitcoin with the USD that we've raised from step one. So now we can go to just watching our investment work? Step three is just the market boost mechanism, right? So as Bitcoin scarcity narrative drives up, the price of Bitcoin dries up, right? So there's less Bitcoin because MicroStrategy investor um, invested $250 million into it, pulling around 24K Bitcoin from the circulation, right? So now there's less Bitcoin, and this puts a lot of fear, right? Whether it's FOMO, whether it's just fear of, hey, like when do I get mine? This scarcity and fear, it drives the price up, right? So this creates a rally in tandem for Bitcoin linked tickers such as MSTR, right? So now the rising price of Bitcoin is driving up the price of MicroStrategy. And for the retail investors, there's a positive feedback which ignites broader FOMO amongst the retail investors, right? So now you got your friends and family and advisors even these days asking, where do I get some? How do I get on this boat before it leaves? Finally, we got our step four, where just the higher share price funds more Bitcoin price. And what that means is just, a lot of people, they doubted MicroStrategy. They thought they would fail. It's a risky play, but they did it. They did it, and this caused their share price to skyrocket. And it's been 5+ years now since 2022, so they're still doing great. Now this leads to, hey, how do I get in on this? Where is the start, before the ship has sailed away too far? And long story short here, you're increasing the value of your company, allowing you to raise more funds to issue more convertible debt notes, bringing in more cash to your company so you can go and return a cycle now, buy more Bitcoin, boosting your market valuation. It's a wash, rinse, and repeat process here. Simple as that. Moving on. Now, just take a look at this. I wanted to give you guys a quick case study just so you can visualize this better. This it has more impact to the younger individuals, as we talked about with home prices, because majority of the boomers and the older ones, they already have their cheap homes that they bought in 1960 for dirt cheap. For look, if $50,000 could buy you this in 1960, an average sized home, you can take care of your family. You don't have to worry about your mortgage and the freaking taxes killing you, and insurance. Insurance could be 10,000. Your annual tax could be 10,000. But if you bought this house for 50,000, you just don't give a shit because you're doing great and you're living large. However, take that same 50,000 that bought you this nice looking house in 1960 or whatever it is. If you were to try to buy a house with $50,000 today, you probably wouldn't find one unless it's in the back ends of who knows whatever the fuck, Nebraska or whatever. You're definitely not finding a house that's nice like this in the suburbs of Florida, Texas, California, or the cities of New York City, Philadelphia, etc. Because it's only going to buy you a freaking trailer park house or something. The median U.S. house cost was 11,000 or 12,000, excuse me, in 1960. But now in Q1 2025, the median sale price for a house was 416,000. It's a 3,400% increase. All right, so as you can see from the image, your average American who doesn't own assets is they're paying in blood from the mismanagement of the dollar by their government. This isn't fun to sit through or watch. Just now, you guys are wondering, hey, like, what's the impact of this all? MicroStrategy buying all this Bitcoin, leading to other firms like Bitmine, Merson, uh, Tesla, etc. All these big public traded companies, investing in Bitcoin for their treasuries. And what's the next steps? How do I get ahead of this? Well, so we've gone from Saylor's MicroStrategy to Elon Musk, Tesla, and Jack Dorsey's Block, and dozens more putting Bitcoin on their balance sheets. So this tells you something, and what that is just that Bitcoin isn't fringe. It's now treasury grade collateral. Everybody from your mom to your dad and these big hedge funds and money managers, they were telling you, hey, like, don't listen to the hype. The United States dollar is where it's at. Well, look, I mean, one of our biggest investors in treasury bonds, Japan, they were offloading who knows how much treasury bonds in the open market earlier this year. The sovereign countries, they're not playing this game where America is the highest saint of the land and they're doing great and they're taking the best steps for the management of the dollar value. You know, they see the printings on the wall. I mean, like, no pun intended, but they're watching as the Treasury is printing nearly trillions of dollars yearly just to buy back their own debt. Recently, we just went and bought about 10 billion of our own debt in open markets because no one was buying them, right? So now with these big institutions and sovereign countries putting Bitcoin on their balance sheets, we're no longer a fringe asset that's just highly risky where anybody could shit on us. But no, we're now treasury grade collateral, better than the dollar, which is devaluing year over year with no up in sight. So with fair value accounting and Bitcoin spot ETFs like IVIT, corporate finance just got a whole lot more accessible for digital assets, driving up the price of cryptocurrency across the world. And so the next steps for treasurers of these big companies is going to be modeling a 1 to 5% slice of the Bitcoin pie. There's still more companies at large who need to get on this train, and trust me, they will get on this train. And if they don't make it in time, well, it's only better for the investor of Bitcoin today because that's going to drive the scarcity up to the moon, leading to a price run, a bold rally for Bitcoin. And so they're going to be running scenarios like, what if you held 2% of your cash in Bitcoin, 3%? Like, so how much is it going to cushion them against the rising CPI headwinds, right? So there's a lot of those talks already happening in boardrooms today. And so there's going to also be a governance aspect to it too. Guardrails. You already see the government having deliberations, Congress discussing recently in Trump's big beautiful bill. They've removed his stipulation where for the next, I believe it was 10 years, he was hoping to prevent states from implementing their own crypto regulations and laws until the federal government has been able to, adjust in the market itself of these AI companies and cryptocurrencies have kind of stabilized or kind of mapped themselves out. So he was attempting to prevent the states from, establishing their own unique regulations and guidelines, which would stifle the innovation of these new hot tech topics such as AI and, Bitcoin, whatnot. So with the potential for governance and guardrails, we're already seeing them draft policies for custody, hot versus cold, and they're setting hard risk limits and nailing down quarterly reporting. They're trying to put everything online. And you can see that as a good or bad thing, right? Because, Bitcoin was created as a decentralized method, secret way for you to sort of manage your own finances and not allow any one entity say or power in regulating how you're managing it and how you're holding it. And so now with all this oversight potential, it can remove that benefit for you. However, in the same respect, with all this governance and potential guardrails being established, it will only serve to bolster institutional adoption, right? It's going to serve to allow rules to be put down where now this pension fund manager can now probably buy Bitcoin for his reserves or invest in stocks and ETFs that track the price of cryptocurrency without those guardrails and such as quarterly reporting, etc. These assets, they won't appear on the balance sheet of your retirement plan funds simply because they're required to purchase suitable investments for their investors, which don't include risky investments that don't do quarterly reporting, right? So, long story short, there more governance and guardrails. Yes, it may stifle innovation in the short term, but it would only serve to bring on more potential investors to the fund, to cryptocurrency. And that's where the big money is with these big pension funds. And so, how are they going to execute this strategy? Well, we already talked about that. They're going to be working with the over-the-counter desks for block trades, such as like 24,000 Bitcoin, etc., or use regulated ETFs. You already see the Schwab ETFs and Bitcoin ETFs, all those price trackers. That's what all these institutional funds are going to be inflowing their cash into once these regulations are finally established and the mapping of these rules are clear to them. For the retail investor, your playbook looks more like this. You got to think like a mini treasury, right? You're going to want to carve out 1 to 5% of your net worth for Bitcoin. While doing that, you want a dollar cost average every paycheck or set up an auto buy schedule, as volatility will now be your friend over the years, not days, with that dollar cost averaging strategy. And so you're going to be owning your own keys with a hardware wallet, which is self custody. It beats any exchange if you're in it for the long haul, right? So if you have that cold wallet, you have that crypto wallet, you're decentralized. You're not going to that bank. This is you for the long haul here. And so a closing thought I have before I head out here, guys. I'd like to leave you guys with one last thought. And that thought is inflation never sleeps nor takes a holiday. And fiat's gonna keep getting printed. But digital scarcity never sleeps. Embracing Bitcoin today could be your capital's best defense for decades to come. And not only so, but as opposed to your parents and grandparents who left you with savings of dollar denominations to the point where that dollar amount that they saved for you won't allow you to buy a house that's at the same level of the house that they could have bought in the past. If you were to begin saving in Bitcoin for your kids, you don't have to worry about that. They can buy a house at your level or even a better house because that price is only going to keep going up, especially with scarcity. And as we now see big money funds and institutions moving in to try to get their slice of the pie. But thank you guys for everything. Please subscribe and comment for more.